Hello, traders. It's Sunday afternoon, May 23rd. The market is not open in China yet, so I don't know how the S&P futures are going to open. We've seen a little bit of a rally. We're going to start today with some market analysis. We'll take a look at my pick from Friday, and then we'll see if we can find a couple of trades for this week. Going to be pretty quiet trading this week. If we take a look at what the S&P 500 has done, you can see how we have a double bottom, higher low. This is very bullish, very encouraging because we've had two tests of the 50-day moving average and buyers came in a little bit earlier here than they did here. That's also an encouraging sign. Nice little bounce. However, there's not a lot of gusto behind this move. Could this be a double top lower high? Yes, it could be. Market could go either way. I've been saying for a couple of weeks, once I saw that we did not get that explosive buying climax off of mega cap tech earnings, huge economic news, dovish FOMC, the chances were diminished for that even happening because now all of a sudden we've got inflation fears. We've got a lot of analysts wondering if the Fed's projections are too low for inflation. So I think that you're going to see a lid on the market because inflation is not one of those things that's going to be resolved with the stroke of a pen. It's going to take a few months for everybody to evaluate just how high prices go. Are there continued supply disruptions? What's the status of global coronavirus cases? It's been improving in Europe. They're opening their countries there. That's going to be good for economic growth. Obviously, the United States also on that path. Very encouraging. Got lots and lots of cash in the financial system. So there are some very positive tailwinds for the market to be able to move higher, but valuations are very stretched right now. You've got the S&P 500 trading at a current PE of 40 and a forward PE of 23. By any measure, that is very rich. So we need a lot of profits to get those valuations normalized, and that could take a quarter or two. Could also take us that amount of time to find out exactly what inflation looks like. Is it transitory? Is it here to stay? We don't know the answer to that question, and we don't need to know the answer to that question. All we have to do is to take a look at what the market's doing, and right now it's telling you it's not going anywhere fast. Look at all the green and red candles mixed in here. Look at these dojis. That is equilibrium. Tiny little bodied candles, and now we finally get some movement, and then we bounce, and movement and bounce. There has been excellent sector rotation, so that's keeping us busy on the day trading side. That is where I'm doing the majority of my trading. With the opportunities I'm finding intraday, I don't really even need to take any swing trades. And the only swing trades that I want to take are selling out of the money bullish put spreads on these dips. So when I get the dip, I'm still able to sell further out of the money just in case the market continues to come in. And by being in stocks that have relative strength, if the market does have another leg lower, those stocks are going to hold up well relative to the market. I'll be able to buy them back if I need to. Plus, I've got accelerated time premium decay working in my favor. I still feel that we could come down and test this breakout right here, which is about SPY 398. And you can see that the S&P 500 100-day moving average is moving higher. So that 398, 396 level I see as very, very strong support. If we get there, I don't think we're going to be there very long. So you have to be ready with your bullish put spreads. You have to know the stocks that you want to get these trades off on because the market may only be there for a day. It may only be there intraday. That's how I'm going to approach it. And that means that today I'm going to be looking for some bullish put spreads. Also, the price is not going to be there right now. I need help from the market. I need help from the stock to get filled on these orders. That would mean that if Monday we get a nice drop in the market, yes, these stocks might also drop and give us an opportunity to get the credit that I want on these spreads. If I don't get filled, no problem. I'm not going to sweat it. This is a holiday week coming up. What happens when you have Memorial Day, that's Monday, a week from tomorrow, is you take a bunch of other trading days out along with it. Friday is going to be super slow. Thursday is going to be super slow. after Memorial Day. Tuesday is going to be super slow. So you take one day out and another 3 days kind of go along with it. And so we're going to be seeing light volume trading. This is a low probability trading environment. You should be trimming your size. You should be trimming your trade count. On my YouTube video, somebody asked me, well, what is your typical size that you trade? Your typical size should vary based on market conditions. And right now, you would want to trade smaller size because the market is just chopping all over the place. You want to keep your powder dry and save it for when you get those really, really nice moves. A move where you're breaking through a downward sloping trend line on heavy volume and you've got nice long green candles break out to a new high. This is where you want to spread your wings. This is where you want to come in and allocate capital and buy calls. This is not where you want to do that because one day you look like a god because your puts are doing really well, and the next day you're selling them for a big loss. Then you buy your calls in here, and then you're dumping them for a loss here. Choppy back and forth action. So keep your size small, reduce your trade count, keep your powder dry. There are going to be better trading environments. Now, if you're a day trader, then you can be firing with both barrels because it's been fantastic and the sector rotation has been brisk. But the sectors that are hot today are oftentimes cold tomorrow. So it's not like you can hold these swing trades for 2 or 3 days. When you have the profits, you have to take them. So it's going to be back and forth choppy price action while we ride out the next month or two. That's my forecast is from SPY 400 to SPY 420 for the next couple of months. We don't have any big economic releases this week. Earnings season is winding down. Could be a real yawner. So let's see if we can get a couple of trades done. I'm going to show you Friday's trade that I posted on YouTube, and I'm just going into my heavy buying search. You can see right here, these are the stocks in heavy buying, and these are some nice looking stocks in here. Nvidia is going to be announcing earnings. Boeing has nice support here, but you can see how it has been able to stay below the 100-day moving average. I didn't like that in particular. It's got a pretty steady downtrend. I think it's going to continue to waffle around and chop around. RBLX. This is an IPO. I highlighted this Friday. I said this is a really good stock to day trade. Friday we had some soft market action, and I said make sure you wait for the market to come in. So you can see here that the stock started to drift lower, and this is what the market did pretty much from the open. You can see it dropped and dropped and dropped. Well, look what happened during this leg of the market drop. This is gray line is the S&P 500, and this is the tell. Much like a poker player is evaluating players around the table, looking for a tell, this is your tell, and this is our edge. When the market takes another drop lower, stock was able to preserve that support level. Market takes another drop lower. What does the stock do? It makes a higher low double bottom. That is relative strength. And as soon as the market finds support here, what does the stock do? It rallies from about $82 and it goes all the way up to about $84.50. Nice little $2 gain right in there. I still like this stock. This is a tech stock. It's an IPO stock. It's held up well relative to other tech stocks. We sold a bullish put spread on this about a week and a half ago that expired Friday. I want to try and sell another one on this same stock. I'm going to put up the 10 SI indicator and you'll see orange line above zero right there. That's your clue that you want to be in this stock. We also have ways of searching for stocks that have relative strength and heavy volume. That is the key to everything that we do. So I'm going to take that SPY overlay off. We're going to take a look at the daily chart and we'll decide where we would like to get in. You can see the 50-day moving average coming in here. Look at the price movement in this baby. So the volatility is very high. This was a key bar. I love this bar right here on heavy volume. That told me that buyers are lined up. Double bottom, higher low. That looks good. I think that it would be lucky to get back down here again. So I want to sell a bullish put spread way out of the money down here. So I would like to sell, and let's put put up the staged order entry screen. I would like to sell a RBLX June 11th, expires in 2 weeks, 66 put, and I'd like to buy a 65 put. Since there's $1 between the strike prices, I want to bring in a 20-cent credit. Let's go into the trade screen. Let's take a look at that spread. Go to the 66.65, and there you can see, again, we are selling, let's repeat the trade, RBLX, June 11th expiration, sell the 66 put, buy the 65, do that for a 20-cent credit. I'm going to have $1 between the strike prices. I get to apply the credit received, which is 20 cents. That means I have to put up 80 cents per contract. 20 cents divided by 80 cents gives me a 25% return on that investment in 2 weeks. But Pete, that spread is 7 cents bid, offered at 37 cents, actually negative 7 by 37. I don't think I'm going to get filled at 20 cents. I don't think I'm going to get filled at 20 cents either. At the beginning of the video, I told you I'm not going to chase, but I know the trade that I want and I know the credit that I want. And if something funky happens in the market Monday morning and something funky happens in the stock and it gets a quick little pullback, we already know it's a very, very volatile stock, I will be ready and I will have my order working. And we'll get filled. I'll be very happy with that price because that means that the stock is all of a sudden going to have to do an about face. It's going to have to be weak relative to the market, which it's been strong relative to the market. Orange line above zero. It's been strong relative to its sector. That would be a very high probability trade if we can get filled. If we can't, I'm not going to sweat it. So that's one trade that I want to do, RBLX. Have that order working right here off the heavy buying list. Beautiful breakout right here through horizontal resistance, earnings before the open. We know that from the B. Stock opens on its low, closes on its high with follow through and follow through. Look what the stock did during a weak market day Friday. It opened on its low and closed near its high of the day. Let's take a look at that 5-minute chart. TGT, target. Let's put the overlay up. You can see it gave back some of the gains late in the day, but relative to the S&P 500, which was down all day, this stock was very, very strong. Again, let's take a look at relative strength and how we use it to our advantage to trade. Market, ka-chunk, stock up. Ka-chunk, ka-chunk, ka-chunk. Down, 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 down. Market selling hard. Almost every stock is going to sell off with the market. And when it doesn't sell off, we know that buyers are so aggressive that they can't knock the stock down because the profit taking is offset by buyers. So they are just bid, 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 buy whatever you can. I want as many shares as you can get. And so eventually when the market starts to find support here, you can see this stock is ready to release. As soon as the market starts to rally a little bit, it goes right up. Now, the advantage that we have is back in here. Let's say that you were bullish and you thought, aha, this is it. I get this nice little market pullback and here's a nice little bounce setting up. Yes, perfect. I'm going to get long TGT because this stock has been strong relative to the market. Market down, stock up, relative strength. It's compressing, market down. This thing is going to fly as soon as the market catches a bid. So you're in the trade and you're waiting and you're waiting, and then the market goes woof. Oops. If you were in any other stock, you're going to get hammered on a move like that. But because you're in the right stock with relative strength, you're able to weather this storm and wait for that market low. Now you could exit the trade also. You could be prudent, say, listen, I'm going to stop out. I'm compressing here. I don't like what I see. The market's continuing to go down. You could scratch the trade all day long right in here and then wait for that market strength right in there. Okay, here we go. Double bottom, higher low. Yeah, okay, I'm going to get in. I've seen enough. I'm in here. I'll take my gains right in there. That's how you trade relative strength. The point is, if you were short S&P 500 and you thought that, or excuse me, if you bought S&P 500 in here thinking that this was a market bounce that was going to go back to the high of the day, and you were wrong, you would lose a lot of money. But because you're trading stocks with relative strength, that gives you a lot of extra cushion. And the tell is that you can see that the buyers are lined up. I like TGT. I think TGT is going to continue to move higher. We're going to take a look at where we might possibly want to get in. I love this breakout here, and that's at approximately the $215 level. So we're going to lean on that $215 level. I'm going to put up the option chain for this. And on TGT, we're going to be looking to sell a 215 to 1250 bullish put spread. This is also in the staged order entry screen. Sell the June 11th 215 to 1250 bullish put spread for a 50-cent credit. So let's see how that trade looks right now. Go to the June 11th expiration, scroll down to 1250, click on the bid. Whoops. I'm selling the 215s, buying the two 1250s. There we go. You can see that is a 10-cent bid offered at 65 cents. I want a 50-cent credit. Let's repeat the trade. TGT, June 11th expiration. Sell the 215s, buy the two 1250s, $2.50 between the strike prices. I want to get a 50-cent credit. $2.50 minus 50-cent credit is $2 in margin per contract that I have to put up. 50 cents divided by the margin of $2 is a 25% return in 2 weeks. I am interested in doing that trade. That's how we do it. Well, Pete, it's a 10-cent bid offered at 65 cents. I don't think I'm going to get filled at 50 cents. I don't think I'm going to get filled at 50 cents either. But if the market does something wacky, market does something funky, we see a little bit of selling pressure, the stock comes in Monday morning, I'm going to have my order out there. I may have it ready. If I get lucky enough to get filled, I believe that this stock is going to regain its footing and continue to move higher in a pre-holiday, very light volume market condition. That's how you have to do your swing trades. Right now, the market's not giving us a lot to work with, so you have to be super patient. You have to try and time out these little dips. And when you get them, you've got to be ready with the stocks that you really like. Try and get into those trades on these dips, and then it's a waiting game. Let time premium decay work in your favor. Wait for the next dip. Wait for the next opportunity. But do not chase these gap opens higher. I think that's a really bad move, especially for swing traders. Thanks so much, everybody. Good luck with your trading this week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.